Well, thanks for tuning in to this talking point conversation on BloombergQuint. Well, a lot has happened in the last few days with regards to the new margin rules, and a lot has been written and spoken about as well. But as we are on day one of this, it's important to get in a country's largest broker to talk about what are his thoughts on these rules, not about the merits of whether these are good or bad. I mean, we are past that. But what changes do they bring about for a retail trader? And as we mentioned in our tweet, we will request Nithin to not just talk about what a trader or an investor with Zerodha would experience, but in general could experience. And he joins us right now to talk about that. Nithin, good having you. Thanks much for taking the time out, and hope all is safe.
Yes, thanks, Niraj, for having me on the show. Yes, it's all's good. Yeah, thanks.
Pleasure is ours. Anything which went untoward in the first day of this new rules coming in? Did people have difficulties understanding, etc., etc.?
Yeah, and I think yeah. I mean, we're okay today. As in, it isn't. No, we thought it'll be a lot more chaotic, but it's been quite okay. As in, people have, we had sent a notification yesterday saying what changes, and generally people have gotten the point, and also maybe they've also figured why it has been done. So no, nothing untoward, at least at Zerodha. I mean, and I'm part of a bunch of broker forum groups. While there was a lot of anxiety yesterday, but I think it seems like everything is going okay. I don't think there is anything that has happened as it was feared that it could happen yesterday. So.
Okay. Well, a lot of people are still not completely aware of the factual changes. Like so many people in the morning tweeted saying that yes, there are these changes, but we don't know what will happen. So to our mind, Nithin, and please correct me if I'm wrong, but to our mind, two major changes, right? The method of pledging shares, and that changes, and the upfront margin requirements in equity and equity derivatives. So can you take us through how life would change for an average trader on Zerodha or on other platforms?
Yeah, so at Zerodha, the way we used to allow customers to pledge shares, we had always asked customers to first move the shares from their demat to us, and then we used to move it to clearing corporation, right? So instead of, the process now is that instead of them moving to us and then us sending it to clearing corp, it directly, essentially, in a way, goes to the clearing corp, and securities remain in the customer demat account. So in that form, in that way, if you look at this, it's actually a much better process. Because what used to happen earlier was that when customer moves the securities to us, when there are corporate actions and all of that, all that reconciliation had to be done by our team. This is actually a much more easier process, and it's also much safer for the customer because the securities continues to remain in his demat account. I think where the industry was affected here, this new pledging, is that a lot of brokers would allow customers margin on the securities lying in the demat account even when it was not pledged. Right. So, for example, if you had a POA, if the broker had a POA on the demat account, they would automatically give that as a margin benefit, and that's where potentially, the experience changes today. So customers will have to first pledge it before they get the margin, and they will not get it automatically, which is what would have changed at other brokers, especially a lot of traditional brokers. But it's not a, I mean, like I said, it's not really such a big pain point. I mean, of course, there is one step involved now of moving the security from, manually from your account, and pledging it to the clearing corp. But it's okay. I mean, I think people have made peace with it, and life's moving on. That's with pledging. What has changed with margins is that, see, the thing is, until now there was no real margin requirement for margin reporting for when someone's trading stocks. Right. There was always that margin requirement when you're trading futures and options, but that margin requirement to trade stocks has gone live from today. So if you want to, for example, buy a stock, you need to have that VAR plus ELM margin or 20%, whichever is lower. So what it means is that, if you want to buy, say, 1 lakh rupees of stock, you need to minimum have 20,000 rupees with you to be able to buy that stock. Now, at a broker like Zerodha, that's never an issue, because to buy 1 lakh rupees of stocks, we have always asked for 1 lakh rupees upfront, right? So this not just us, like a bunch of online brokers, we have always collected 100% money upfront before a trade, for someone to take a delivery trade. So that changes a little today for people who are not asking for the money. In a sense, a lot of traditional folks would have asked for the money after 2 days, because the settlement was T plus 2 days,
T+2.
right? But yeah, but going forward from today, they have to collect that VAR plus ALM upfront, and if there is that VAR plus ALM is not collected, there's a margin penalty that's applicable from today. So that is where I think life changes significantly, especially for people who have built businesses based on relationships where they've collected funds after the purchase of stocks, or collected stocks after the stocks are sold, right? Because stuff like that, little changes a little, but again, something that I think the industry can live with. It isn't really a big change as such, and it actually probably protects the entire ecosystem in the long run. I think one thing which potentially is a deterrent today is, see, until today, when you made intraday profits, all brokers used to allow customers to use those profit instantly to get into newer trades, right? But with the new regulations in place, you can't allow that to happen. You'll have to wait for the profits to get settled before it is allowed to be used for new trades. So I think that's where even today the most queries that we have received have been around that, which is there were intraday profits made yesterday by trading stocks, and they're not seeing that as a balance available to trade, right? So, and I think that's where the most queries we have gotten, and I'm guessing that's how it will be for most of the industry. But and yeah, and the last thing about margin is this whole T1 margin required to sell shares when you don't have it delivered in your account yet. So yeah, so if you have, say, bought stock on a Monday, and if you want to sell a stock on Tuesday, you need to ask for a margin from the customer if you're not doing this whole early paying. Yeah, so there are a bunch of moving pieces in this. So maybe so yeah, I can just keep talking about this.
No, it's great. But just a couple of these things, if we can talk one by one, Nithin, because these are, it will be educative for the people who are listening in. So just one of the points that you mentioned about the trade done intraday, I think when I saw one of the mails from Zerodha or a blog from Zerodha, it seemed to suggest that it's true for equities, but for options, people can still use their profits made to make another option trade. Would that be a fair assessment or no?
No, not profits. You can exit an option and use that option premium for buying another option trade. Because when you buy options, there is no concept of margin, right? So when you trade futures, when you short options, or when you buy stocks, from today for stocks there is a margin requirement. For buying options, there is no concept of a margin, so there is only a premium. So you can sell an option and use the proceed to instantly buy another option, but you can't use the proceed to buy something else which requires a margin, right? So, but yeah, that's about intraday profits.
Okay. One quick thing, and something that a few people asked about as well, and I don't know how it happens on your platform versus others, which is the margin required to sell shares that I have in my account. Now, how disgruntled are people because of this? And is there a way around, or is there a smoother way to execute this?
Yeah, no, sorry for missing it. This is actually the biggest point of of everything from today. It's just that at Zerodha we have our systems in place to to deliver the shares. So essentially, why is margin required for selling stock, right? Is because a customer can potentially sell shares and not deliver the stock, right? Because if you look at traditional brokers, a lot of these brokers wouldn't have given POA to the broker. That means they typically, historically, the way they've done it is they first sold the shares, and then they've transferred the securities to the customer, to the broker, right? Now, the big risk in this kind of a setup is that what if the broker sells the share, allows the customer to sell the share, and customer doesn't deliver it next day, right? Then the broker is potentially taking the risk of client defaulting, right? And this asking for margin to sell a stock is to ensure that the customer can't default on delivery. That was the whole thesis around asking for margin, because a lot of people have this query on why is margin required to sell shares. At a lot of online brokers, the shares, people don't realize that your shares are already kind of because of the POA, etc. The broker already has the shares with him, so there is no client default risk. But a lot of traditional setups where POA is not given to the broker, there is a risk of client default, right? So that's why the short margin for selling shares that you hold in the demat account is required. Now, one way to get around all of this is for a broker to take the shares from the customer and give it to the clearing corporation the same day, right? So clearing corps have extended the timing, until like last week they used to take shares from brokers only till maximum till 4:30 p.m. Now they've extended till 9 p.m. in the night. So a broker can, for whatever shares that was sold during the day, the broker can take it from the customer demat and give it to the clearing corp on the same day, which is called as early pay-in. Then there is no need to ask for margin from the customer, right? So that's how we have wired the process today. And so you can sell a share at Zerodha today and not have to pay any margin for selling. I think one of the reasons we've been able to do it is because the back office, etc., is in-house. So we are in control of the tech. Most brokers today rely on vendors to do this. So I'm sure all the brokers will transition into doing this early pay-in in the next few days of sorts, and then it'll be kind of a standard process across the industry.
Yeah, I was just about to ask you that do you think that it is a cost factor which prohibits some of the people from having the tech in-house? And is it prohibitive in nature, or do you reckon that everybody will come around?
No. So the thing is, in-house tech is, this is this complex. Actually, broker back office is probably one of the most complex pieces of technology. So it's very tough to, there are 400 retail brokers in the country, right? I mean, how do you go? How do 400 retail brokers go afford to have, tech? People who understand firstly tech, and secondly, in terms of just understanding the complexities around settlements and trade processes and all of that. So no, I don't think every broker can have in-house tech, and there are quite a few good tech vendors. So I think it's the right way to go and use a vendor for this. Like I said, I think where the community went a little probably slow was everyone is expecting for this to be extended. So I think people were not wired to be ready on day one. But I think, like I said, broking community is a very resilient lot. So there have been a lot of changes, and we've made all those changes. So even this will happen in the next few days.
Interesting. One last question, Nithin, and that is something that a couple of brokers who were actually in favor of this told me. And I don't want to get into names of certain things, but there have been a couple of instances wherein the misuse of POA, etc., has happened by brokers, right? Now, they were of the opinion that we are slowly transitioning into a system, if not now, then over the course of the next few weeks, months, etc., wherein the possibilities of this happening would be remote. I mean, a devious mind can always figure out ways, but largely remote. And also that so that was the one factor, and that we were also moving to a system wherein instead of T+2, we may transition to a T+1 or T itself. Now, any thoughts on both of these points?
No, I mean, I think we are set up right now for doing a T+1. So in the sense, I don't know if how much time clearing. No, not just us. I'm saying the clearing corps and etc. Right? Because see, until now, the biggest challenge of this T+2 was the time taken for payments to happen. Right? So if you bought stock, there was time given for the buyer to send money, and there was time given for the seller to sell, transfer the securities, which used to take 2 days. Right, but thanks to now this new system, the money is already upfront in the customer account, and there is this whole incentive for the broker to collect the shares on the same day. That means if you have money and shares on the same day, you can potentially settle it in the next trading day, right? So I think I think like if I had to take a bet on it, I'd probably take a bet saying maybe in the next 1 year we'll probably see a T+1 kind of settlement, which is good for the industry. I think we'll be one of those first few countries to be there. And in terms of this whole POA and the risks of POA, I think for sure. I mean, I think like even at Zerodha, from January this year, all the new accounts that are opened with us are non-POA accounts, because now depositories have opened up a new way to debit shares, where the customer authorizes any shares that has to be debited before selling a share, right? So there is no POA, but the other point in all of this is that, see, most of these issues that have happened with the broking industry, right? It was was not really misuse of POA of sorts, but it was more, almost wealth management that went wrong, right? As in, maybe a relationship manager, maybe a broker, he promised X amount of returns, and say, the problem here in this industry is that, like customers are all okay. I mean, I don't know if we can call it a problem, but customers are generally okay. They keep quiet if they're making money, but then as soon as some losses happen, they get loud and all of that. Now the issue is that everyone entering the markets has to understand that in the stock markets there is nothing called risk-free return, right? If someone is promising you higher returns, it's coming with a much higher risk as well, right? So maybe customers also, there's a mistake, a lot of customers, that they get greedy into believing that they somehow can make money without taking risk with their money, right? So and usually, if you kind of go back and see what's happened with a lot of these brokers that you mentioned, I think what went wrong was that piece, which was someone promised higher returns and it didn't come through, and someone took more risks, so money was lost. And then, once you kind of get into that kind of a setup, then broker ends up, to save his ass, is probably using the POA and etc.
But that won't happen now. I mean, let's assume that the fault may be whoever's, but that
Right.
the possibility is lower now.
Yeah, I mean, misusing POA, I think, till POA is allowed, I know, but potentially it may not be allowed in the future. But misusing POA is the thing is, the problem is, I don't think this will still cover the wealth management angle to it. I mean, if someone is mis-selling, high risk, high return as low risk, high return, I mean, potentially a customer can still get missold. So I don't know if this will really cover for it. I don't even know if there is a right way to cover for this. I think the only real way is to educate customers, saying there's nothing called as low risk, high return.
Yeah. Fair call. Nithin, really appreciate you taking the time out and joining us and giving us this lowdown, and all the best for the quarters ahead.
Cheers. Thanks a lot, Niraj.
Thanks. And viewers, thanks for tuning into this leg of The Talking Point.